In April 2026, the World Bank issued a stark warning. The ongoing conflict in the Middle East and severe disruptions across global supply chains are applying immense downward pressure on the world's economy. In the exact same week that report was published, the Indian stock market had its best performance in 5 years. The Nifty 50 index surged 6%, while the volatility index, a metric that tracks investor fear and uncertainty, dropped by nearly 8%. This bar chart shows exactly how much of an anomaly that is. While other major global economies are facing stagnant or declining averages, India is projected to maintain a 6.6% growth rate in fiscal year 2027, making it the fastest growing major economy on Earth. That resilience is an engineered outcome. Over several years, India has constructed a series of macroeconomic buffers, deliberate structural defenses designed to absorb international shocks before they can destabilize the domestic market. The most glaring vulnerability to India's continued growth is its reliance on global oil. When energy prices spike in West Asia, the shockwaves hit Indian consumers directly, making energy independence an urgent defensive priority. To counter this, the government is looking to the Himalayas. The cabinet recently approved a massive 40,000 crore rupee investment to build the Kamala and Kalai-II hydroelectric projects in Arunachal, Pradesh. This adds nearly 3,000 megawatts of renewable capacity to the national grid. They are pairing that hydro expansion with nuclear baseload power. The state-owned utility NTPC signed a pact with France's EDF to evaluate European pressurized reactor technology, advancing a concrete goal to install 100 gigawatts of nuclear capacity by 2047. The strategy extends to raw materials. Through the newly formed North Odisha Development Council, the state of Odisha is directing heavy investments to transform the Keonjhar district into a mega steel hub, aiming to rival established centers like Rourkela. By securing domestic, baseload energy through hydro and nuclear power, and simultaneously hyper-localizing the production of raw materials like steel, India is actively insulating its national supply chain from international disruptions. Physical infrastructure requires a foundation of grassroots economic stability to function properly. That starts with the agricultural sector. Global supply chain disruptions rapidly inflate the cost of fertilizer. To shield farmers from these price spikes, the government implemented the Kharif 2026 New Bomber Scheme, dedicating over 41,000 crore rupees to stabilize nutrient-based subsidies. Alongside agricultural support, a massive engine of domestic resilience is operating quietly in the financial sector. According to NITI Aayog, women borrowers now drive a 76 lakh crore rupee credit market, providing immense liquidity and stability to local communities. This diagram illustrates how the government is securing the future of the workforce. They launched the Skills Outcomes Fund using a blended finance model that pools public, private, and philanthropic capital together. It shifts the focus from simply tracking enrollment to tracking verified employment results. The mechanism is highly practical. Training providers do not receive their payouts up front. The funds are locked until their candidates actually secure and retain jobs in high-growth sectors, like IT, healthcare, and green energy. By subsidizing farmers against global inflation, scaling female financial empowerment, and tying education funding directly to job placement, India is building a firewall against domestic economic fragility. Physical and economic buffers are ultimately incomplete if a nation cannot anticipate the shocks coming its way. To address environmental volatility, India is deploying localized early warning technology. They are actively installing advanced Doppler weather radars and seismological observatories in Jammu and Kashmir to predict and mitigate natural disasters. On a broader scale, NITI Aayog is pushing to utilize the Anusandhan National Research Foundation to provide patient capital, long-term funding without the pressure of immediate returns, to early-stage scientists developing deep tech solutions. This fortified domestic base gives India the leverage required to project power outward and shape international policy to its advantage. In April 2026, India swept the United Nations Economic and Social Council elections by acclamation. They secured vital seats on bodies like the Commission on Science and Technology for Development, allowing them to directly influence global agendas on artificial intelligence and digital infrastructure. This rising institutional stature is mirrored in cultural and sporting arenas. The Indian Air Rifle Team recently delivered gold medal performances at the ISSF World Cup, dominating the international competition. By advancing domestic technology and securing key international governance seats, India ensures it operates as an architect of the global future, rather than just a participant reacting to it. The hydroelectric dams in Arunachal Pradesh, the policy seats at the UN, the agricultural subsidies, and expanding women's credit lines function as a singular, cohesive web of national defense. These two line graphs compare the final, critical structural advantage. While many developing nations suffer severe volatility from holding foreign-denominated debt, India's public debt is predominantly rupee-denominated. This smooth, stable line means the country is insulated against foreign exchange shocks. India's geopolitical posture relies on preemptively insulating itself and using global volatility as a catalyst to accelerate its own self-reliance. This 6.6% growth projection is anchored in these specific internal defenses. As the world navigates the turbulent 2020s, India's strategic focus on internal fortification is providing the stability needed to maintain expansion.